Welcome back to Your 1230, the only podcast where our guests tell their story with the help of 12 questions in just 30 minutes. I'm your host, Mike Solitro, and today we are very excited to be joined by Kevin Bibelhausen. Although he has no finance background, Kevin learned to raise money from investors and now currently runs his own fund, Fruition Capital, as well as Heritage Fabrics. Kevin, welcome. We are really thrilled to be speaking with you.
Thanks, Mike. Happy to be here.
Course. And those are two things you don't necessarily hear together, a fund and a fabrics company. So before we get how you got there, if you meet somebody new, how do you tell them or how do you introduce yourself? Or what do you tell them that you do?
So it is a bit of a complicated backstory, which I'll get into. But I tell them that I run a lower middle market in a textile company, and that I also invest in small businesses. The whole thesis of our fund is to invest in lower middle market businesses between $1 and $2 million in EBITDA, and back highly qualified sponsors, entrepreneurs, or wannabe entrepreneurs who have operations experience that want to start working for themselves, but don't necessarily want to go the startup route.
Okay. So EBITDA, earnings before interest, taxes, and help me on the
Amortization.
amortization. Thank you. So what types of business are you looking at in that range generally?
So we typically look at businesses that are B2B. We don't really want to B2C focus. Business to business deals are best. We look at long tenured businesses. So one of the things that's different about what we do, and I'll just kind of explain for your audience, what the I guess the sort of world I've come out of here. So I'm in the space that they call sort of search funds or self-funded search, independent sponsor, micro private equity. It's got about 15 different names, but it's all fancy ways of saying a random guy goes and buys a business using the same techniques as a private equity firm or an independent sponsor. They put debt on the business. Typically through our model, the sponsor will take on an SBA loan, which is a government-backed debt product. And then they'll either put in their own equity or raise the equity from a group of investors. And so that's what I did to acquire my business, Heritage Fabrics. I didn't have um, a, a finance background or any sort of capital raising background. Like you said, I had spent the majority of my career in healthcare and in technology. And I wanted to do search for a long time. I wanted to own my own business, and I knew I wasn't a startup guy. So once I read sort of the Bible of search, which was released in 2017, which is the aptly named Harvard Business Review Guide to Buying Small Businesses. And there's a story. Yeah, it's a really great SEO title. There's a story in that book that really attracted me and just flipped the switch for me, which was a guy that ended up going and buying a porta potty business and scaling it to 2 or 3x, whatever it was. And I remember reading that and thinking, well, that's exactly what I want to do. I want to take an established business, something that's not super sexy, and be able to kind of bring my operational chops, leverage technology, more modern management, and just see if we could grow that versus going and trying to, start a social media company or some dating app or whatever in the startup world. I wasn't attracted to that. I wanted to get an actual tangible brick and mortar business, and then bring those sort of new economy digital marketing tools to this brick and mortar business.
So I've got a ton of follow-ups because that's a great background, and I want to try to ask them in a somewhat smart way here. First, I think it's really intelligent and kind of self-aware to say, I'm not a startup guy, so that's not something I want to do or go down. I think most people think entrepreneurs, that's the way to own a business, run a business. They don't take the step back and say there are other paths here, which you did. But what does the process look like to from identifying the company to raising capital to saying, all right, here's day one, here's my first 90 days. This is what's going to look like. What does that look like?
Yeah, well, it's an interesting comment. I'll take first and I'll kind of get into the whole timeline and everything. But I mean, I grew up in a normal middle class neighborhood, and there were all these business owners that lived around me. But I didn't realize, I thought you either, so there's an asphalt, guy who owned an asphalt company, a guy who owned a construction company, a guy who owned a plumbing company, whatever. And I I didn't know what an investment banker was until, I don't know, 5 years ago or something. So when I grew up, I thought you either started this business or you inherited it from your parents. I didn't realize that you could buy or sell them. So anybody listening to this, it is kind of a mind shift when you realize that, oh, that's possible. These people have to be able to exit. So in order to do this, there's a million different ways to kind of get started. The easiest way and the thing that people tend to start with is like a biz buy sell. So biz buy sell is like if your listeners are familiar with LoopNet, it's a little bit like LoopNet. In fact, they're owned by the same company. Um, and you go on there and you can see businesses of all kinds available all across the country, and you'll get super low quality businesses, and then every once in a while you'll find something that's actually worth pursuing. But that's a nice way to kind of get your feet wet, and get started, kind of seeing what this space is like. And then, so let's say you identify a deal. You've either found it on Biz Buy Sell. You've made connections with business brokers, investment bankers, because that's who represent these deals. Just like in real estate, right? There's a broker intermediary. But so you would build these relationships. You get the listing. You are interested in the business. You reviewed the financials. You go and meet with the seller, or have a call and just kind of get on the same page and make sure that that you guys. I mean, you're kind of dating at that point, right? Like I think it's a little bit different than, and I've never done any large scale real estate transaction or anything, but these kind of businesses are much more personal than any real estate asset. There's a lot more people involved. It's just a lot more blood, sweat, and tears. So that fit is really important, and who you buy from is really important. And so those sort of early conversations are key in order to make sure that, hey, he's the seller is in some way trusting me with, usually there's some sort of earn out component or some performance, based compensation. So do they trust me to be able to deliver on that? Are we going to work well together? So there's all these kind of things that you need to suss out during this initial kind of due diligence period, which is then followed by an LOI, a letter of intent. If you do choose to move forward and you want to try and acquire the business, and what that does is it takes it off the market. You're able to spend some money in due diligence, going through, getting a quality of earnings study, which is basically getting an accountant to rebuild the P&L from bank statements and credit card statements and everything, and legal due diligence. So those are the two big hurdles to kind of get over. Of course, you have your lender and your bank, but that's pretty, that's typical with any deal. But those are two different things that people may not be aware of.
All right. So I'm going to try to stay out of the weeds, but this stuff is really fascinating. So the due diligence part, I won't ask any follow up on. But you mentioned the personal piece, which I think really gets overlooked whenever there are uh, acquisitions, mergers, anything that there is a business changing hands, because these are real people that still need to come to work. So using the real estate example, it's like I'm buying a house, but the tenants are staying there. So it's important to know who's there,
Right.
what skills they might bring, things like that. So how do you, besides the financial, the legal due diligence, how do you determine is this a good fit culture wise or skill wise or people wise?
Yeah, there's always the asymmetry of information on a deal like this. More so than I think in a lot of other deals, a lot of other asset classes. There's just so much that can be buried in a business, and just so many skeletons in closets, and things swept under rugs, and whatever metaphor you want to use. But I personally, and we believe at Fruition Capital that it's really important that you have that seller relationship. I'm actually going through this again right now, where I've got a couple deals in the pipeline, and I'm sort of redoubling down on the fact that the relationship with the person that you're buying from is so important. Because if you have sort of a bad feeling, or you don't think this person's on the up and up, I guarantee you, once you start going, into the weeds and start looking underneath the surface, it's going to get ugly, and things aren't going to go your way. And again, with the asymmetry of information, that's a problem.
Yeah.
So I start and look at, is this somebody that I want to basically have in my life for a number of years, call it 3 to 5 years, because depending on the deal, depending on how you structure it, you can that can be very much the case. On the deal that I recently purchased last year, the seller is I offered him a board seat because I wanted his wisdom, his experience, and he also has a financial interest in the company doing well, so he has incentive compensation in there. So it made sense for him to be involved. That's one of the things you can do to sort of mitigate the risk. In addition to doing, your financial due diligence and your legal due diligence on the company, you can also structure the deal so that there's you have some safeguards in place. So I keep talking about performance based comp. So typically it's called an earnout. Now the SBA doesn't let you use an earnout, but what an earnout is basically like, let's just say, hey, we need to be at 85% of revenue, or X percent over last year's revenue is this payout, et cetera, for a couple years. You can sort of do the reverse of that on an SBA product and basically say, okay, revenue needs to stay at 90% of 2023, or we ding your seller financing, and we now owe you less money. So there's a couple different ways to sort of protect yourself from that asymmetry of information, and a good attorney will help you do that for sure.
Now, when you talk about kind of creative deal structure, I think that's really important to highlight because a lot of people, when thinking of deals, it's yes, no, is this a go, and that's it. But when you give the examples of board seats, tying compensation to performance to earnings, that there's ways to get more people in the boat together where we're rowing in the same direction, and especially where, as you referenced a couple times there, one of you has all the information, the other is doing the best with what they are shown. So I think that's really that's smart, and it's something that's I think you learn once when you kind of don't do that, and it's like, all right, I've purchased something that I wasn't really fully prepared to do. You mentioned similar to kind of a private equity where I'm this random guy walking into a business. How do you prepare yourself for somebody who is not the expert on, the porta potty example? I'm assuming the fabrics example, that's not your bread and butter. What is
No,
important to know, and how do you learn that stuff?
it's funny because like I said, I'm doing this again. I've got a couple other businesses on the line right now, and it's just been consistent through every seller I've talked to. And I've heard this multiple times from the different brokers, is that you'd be surprised at the kind of egos that walk in those doors. And even at businesses that are at the lower end of lower middle market, like in the 1 to 2 million. I mean, we're playing in a space a private equity isn't playing in this area. I mean, they're peaking down a little bit, but it's really too small potatoes for them. And so like we tend to think like, oh, the private equity guys, those are the ones with the egos. I've been surprised that the number of brokers I talk to, a lot of these deals blow up, these smaller deals like that we play in, just because somebody comes in and just is a complete jerk to the seller, or they think that that their presence is a gift to everyone at the table, or just I think going in and being curious and being genuinely interested in the business that you're looking to acquire is goes a long way. um, and I really I can't stress that more. It's just being curious, being open minded, asking questions, and realizing that the people on the other side of the table usually have a decade plus of experience operating this business. And not only do they know the information about the business and everything, but they just know the industry better than you, and that's okay. It's not that you can't learn a new industry. It's just, is this the right person to teach you? And are they willing to be that partner? And if they're not, it's still not necessarily no, but is there somebody that can? Is there somebody that you can hook up as a mentor? Or maybe there's a GM in the business that'll teach you more about the business. But yeah, I mean, it sounds trite to kind of say it, but I don't know, just be a good human being. Be genuinely interested in the person on the other side of the table and listen to what they're looking for. Um, and try not to come in with more of an agenda than is what's necessary.
I know you said it's trite, but if it was more common that people were genuinely curious, genuinely, compassionate and interested in collaborating, I think not only deals like this, but in general, we'd just be better off both personally and in business. But it's neither here nor there.
Humanity
Um,
in general, yeah.
there you go. So if I'm listening to this, I'm like, Kevin, you make a lot of sense to me. I've got some money that I've saved up from XYZ. I think I'm interested in doing this. What should I do? Where do I go? How do I talk to you? What does that look like?
Yeah, so you could go to our website, Fruition Cap, as in Fruition Capital, .com. You can also email me, Kevin at Bibelhausen. My name will be spelled in the show notes and everything. So Kevin at Bibelhausen.com. And that's, there's two ways that you can be involved, right? One is being a sponsor. If you are the person that wants to go out and buy the business, operate the business, take out debt, that's personally guaranteed. FYI, we can go down a whole rabbit trail on that. But if you want to assume more risk and more operational control, we can back you with capital. So that's one way. That's functionally what I did. Now the flip side of that is, okay, you have capital, but you're not interested in being a day-to-day operator. You're not interested in assuming that much risk. You want to allocate, right? You want to invest in a fund. Well, you're welcome to do that with us too. We're about to close out our first fund of 5 million. That we've raised a quarter ahead of schedule, so things are going quite well. And we're about to kick off our
Very nice.
second fund in the next couple of months that will probably do 15 or 20 million. So we'll actively start soliciting for that again. But that's a great opportunity for somebody who wants to, take a chunk of capital and kind of get into private equity, micro private equity, where the returns, we on a conservative side, we underwrite for 25% IRR. That's
Wow.
what we tell our investors that we look to return. Now, I'll tell you, when we actually model the deals out, and of course, a model is wrong as soon as you do it, but we look to do between 30 and 40% IRR, knowing that there's probably a J curve that's going to happen and everything. But, getting around 25% IRR for the blend of the fund, is our goal, and a very achievable one, just based off of how this asset class has performed over time. The beauty of, there's positives to doing both, and actually we've got people who went out and bought a business and used us for equity, and then are also investors in the fund. So it's kind of a full life cycle thing. It's like people want to be involved in this space, and they, if both of them sound interesting to you, you can do both. But the nice thing about being, an investor is that you have a diversified portfolio of small businesses. I think we'll probably end up 8 businesses or so in Fund One. So your check is diversified across all these businesses, which is sort of the selling point for the fund, right? Is diversification in a volatile asset class.
So you're talking 25 to 40% here, kind of just on its face of rate of return. What types of
Yep.
things are you doing in these businesses? I don't want to say immediately, but when you walk in that either they have not thought of, or where is your value add to get that kind of return for your investors?
Yeah, I'll give you a perfect example, or what I think, of course, is a perfect example is the reason I bought Heritage Fabrics is because I started my search and I was looking for healthcare businesses and I was looking for technology businesses. So if anybody's familiar with MSPs or managed service providers, it's like outsourced IT, outsourced cybersecurity, that kind of stuff, networking. And they were both very, very overvalued. One, because of COVID, everybody had record years in 2020 and 2021 in the healthcare space, and of course, they wanted to trade at those multiples. So I didn't feel like they were sustainable. And in the technology space, private equity had come in and bid a lot of those businesses up, and so they just didn't fit within where we needed to be. If you want to buy it with an SBA loan, you really need to buy between 3 and 5x multiple on EBITDA, and they were trading higher than that. So I had to get creative, and I was looking at all kinds of different industries. I said, okay, I'll be industry agnostic, but what I'm going to do is I'll bring the technology and the operations, the process improvement piece that I've done throughout my career. And so I picked an industry that's thousands of years old in the textile space, and is lagging behind as far as technology and using offshore talent and all of the things that anybody who spends 15 minutes on the internet knows about. But regular people don't know about that. The people who are operating these businesses have no comfort level, bringing on somebody overseas talent or building a website. So I spent the last year building out an e-commerce platform for the business. for Heritage. Before that they didn't have a website. It was still, email and physical reps going to, all the accounts and everything. Well, now people can log in and they can see our products. I mean, it's a novel idea, right? I mean, but they didn't have the skill set to do it, and it's very expensive to outsource all of that. So that's the kind of value add that this younger generation, these people, late 20s sometimes, but mostly 30s and 40s coming in, who were kind of tired of the corporate grind. They've been, some of them have been wildly successful, way more successful than I was ever in my corporate career. But they're interested in, like, I want to pull the ripcord. I want to get out. I want to work for myself. Those are the people that are really attracted to do something like this and leverage their skill set that they've built over a decade plus of in corporate America to sort of grow up this small business.
So this will be my last follow-up question here, but I want to make sure I ask it. You talk about these changes, you're coming in as a new owner, as a new investor. So that's a big change for the folks that are left behind. Now you're talking about changing the day-to-day, the way the product is made, sold, marketed, all those things. I'm just a guy who works there. I can deal with change, but you're changing everything on me. How do you convince me that you're not just coming in, gonna cut costs, cut my job, just looking to raise that you're actually care about what I'm doing here?
Yeah, we thought a lot about this. And in fact, one of the things that we did, so in the transition, what the seller and I did was we called an all hands meeting, and then we told the staff at the same time that the business had been sold and that I was the new owner and president of the company. But at the same time, I told them people were worried about, they kind of knew the seller was retiring. Like, it was kind of an open secret, right? Like, these things, it's a small company, things get around. And we said, I've signed the longest lease in the company and the company's history for the space we're in, which means we're not moving anywhere. People were worried about the business being sold and then being rolled up to a larger company as a division of so and so. And so that eliminated that concern right off the bat. We're here. We've signed, it was 2 5-year leases, right? So option to renew after 5 years. So, but typically they'd sign 1 or 3-year leases. So that gave people stability there. The other thing I think I got, based on the business that I bought, I got a little lucky because I bought a business where 10 years ago, it was bigger than it is now. Okay. And they remember those times. And they remember when they were selling more and things were really good and it was exciting. And things changed. The market shifted, and Heritage didn't really adapt to some of the changing market forces. So all that to say is they were really excited about somebody coming in with new vision. These are people who had been through an ownership change before. They had seen, a lot of them had been around since the founding of the company. We have a lot of original employees still. And they're happy to see another generation kind of come in and say, we're not happy with the status quo. We're here. We want to be here. And here's how we're going to get there. So I've not found an issue at all with kind of laying out this vision and having people fall in line and take hold of it. Sometimes I feel like I'm not moving fast enough for them, which is wild because I feel like we're, moving a million miles an hour, but so that's not been the problem. You do obviously have to worry about, change fatigue and making sure that you don't, deploy a whole bunch of different processes, systems, tools, whatever, and just make their heads spin. So you do have to go slowly on things like that. But in general, about like casting the vision for the company, and it's like, here's where we want to be. I couldn't ask for people to be more bought in to the future of the company. And I think a lot of people have that experience, especially when they're buying from, that 65-year-old plus owner who, let's be honest, has probably taken their eye off the ball, their foot off the gas, because I would too, if I was kind of coasting into retirement. I wouldn't be at the office every day, or I wouldn't be grinding as hard as I was when I was in my 30s. And I think they're just excited to see that new energy kind of come in.
Yeah, and the flip side of that with the, coasting retirement is I'm not going to take those big swings. Things are fine. I don't care if
Exactly.
you
Why
don't
would
grow
you?
20%. Yeah, exactly.
Yeah. Yeah.
But I love where you started there with the lease because I think that's pretty basic, but it is kind of a show of I know this is important to you. This is something that is very, concerning. That hey, I wake up tomorrow and the doors are closed. No, we're going to be here for this time. So
Oh,
it's just go ahead.
and I was just going to say, especially our industry. And so in the textile space, the furniture space in North Carolina, famous for just shutting the doors. I mean, just anybody who's interested, do a bit of Googling around the furniture industry in North Carolina and the number of business closures and how many plants have been shut down. And I mean, this is visceral for a lot of these people. They're because they've all worked in the industry. It's North Carolina is a textile and furniture hub, and most of these people have family members that were in the business, mom and dad were in the business, whatever, and so they remember not too long ago when a lot of people were shown the door, and it still happens. But I'm sorry, I didn't mean to completely interrupt you, but that's 100% true.
Anytime somebody's going to make a point where their face lights up and they want to, I always let them jump in because it's better than anything I have to say. So no problem there. So we somehow are already coming up on time. We spent a good amount of time talking about kind of what your day to day looks like or what it's filled with. Running these two businesses, I'm sure, takes up a big chunk of your time. How do you stay on top of what's coming next in each of them? And then how do you make sure that you don't hit a wall or burn out?
Uh, Boy, that's a tough question to end on because I don't feel like I'm necessarily succeeding too well at that. Um, but I'll tell you what, like I'm the first year that I was doing this, it was just keeping your head above water, and it really took me 9 or 10 months to feel like I was comfortable in the chair, so to speak, as the CEO of the business. So that's sort of, I mean, and I'm lucky that I've got a good management team in place. So I'm not necessarily essential to the day to day at Heritage. I'm more big picture, which is exactly where I wanted to be. Because by the way, I'm not that useful coming from outside of a textile background. How useful can I possibly be, right? Um, so it's giving me time to focus on the fund and help, which is really a passion of mine, is helping other people escape sort of corporate America if they have an inkling to do entrepreneurship, but startup doesn't feel quite right to them. That these businesses are available, and a lot of baby boomers are retiring and looking to liquidate, looking to sell their assets off. And so you have an opportunity as millennial, Gen X, whatever, to come in and take a piece of one of these businesses and grow it into the next generation and have something to really kind of leave your mark on. That's important to a lot of people that I talk to. And then also just professionalizing our space. So it's kind of been affectionately referred to as the Wild West. In the lower middle market, kind of anything goes. I mean, it is. I mean, I've got a lot of friends who do the real estate thing, and I'm no expert at all, but I know things are a little bit more formulaic in real estate. It's a little bit more mature. That is not the way it is in business buying. It's you freewheel it. I mean, it's you could pretty much make anything up for a transaction, and you see valuations all over the place. You see deals all over the place. So our idea as the fund is to kind of come in, professionalize the space a little bit, kind of settle in some market terms for investors and for sponsors, and then pool capital and write one of the larger checks into this space. So, for instance, I raised $800,000 for my deal. I went to individual investors, high net worth individual investors, and raised $50,000 at a time. So my cap table is quite large, 10 to 12 people. When we started Fruition Capital, we kind of just said, okay, well, we don't want to do that again. We don't think other people should have to do that. So let's put a fund together. We pull capital, and so that way, okay, Fruition Capital could write a check for $600,000 to Kevin for buying Heritage Fabrics, and he has a $200,000 equity raise left. Well, that's a hell of a lot more manageable, for somebody who's never raised capital before than 800,000. So that's sort of the idea, the benefit of working with a fund, if you're a sponsor versus just kind of going cowboying it on your own. You can do it, but it's a heck of a lot easier when you've got a fund behind you.
And I really respect that answer because I mean, a lot of people will say, just, keep my head down, work hard, and I keep pushing through. But you're very grounded and humble in your answers and self-aware that I've done well, but I'm still learning, I'm still working, and I
Yeah.
still figuring all this out. So I appreciate the candor there. And from all indications, I get to talk to a lot of folks in and around your space, what you do, and it's not always as collaborative, not always as kind of an eyes open for everybody involved. So it is refreshing to hear that. Let's end
Yeah.
here. Is there anything I didn't ask you that I probably should have?
No, but I would love to hear from people. I'm constantly talking to people interested in this space, either as an investor or as a sponsor, as somebody who wants to go, operate a business, buy a business, and operate it, or as somebody who just wants to put capital into this space. We're about to, like I said, we're about to open up that new fund, so there's going to be plenty of room in the near future. And that's exciting. We see, I mean, the deal flow we get is incredible because, like I said, we write one of the larger checks in the space. So we're sort of the first stop for a lot of these sponsors. And, and so what that means is we get to cherry pick the best deals, or what we think are the best deals, right? And then diversify somebody's investment across these great deals that we see. So it's, if you've got the time to review these deals on your own, and you want to be a professional, investor one deal at a time, God bless you, go with God. But if you're interested in, just placing capital and sort of letting the fund do the work, I mean, love to hear from you and love to hear from you if you're interested in buying a business too.
Awesome. So we will post all the contact information, all the links discussed in the show notes. One more time, Kevin, where can people find you and or how can they reach you?
You can look for us on fruitioncap.com, Fruition Capital. Um, uh, and you can also email me at kevin@bibelhausen.com. I'm also on Twitter and LinkedIn. I promise you, if you go look at Bibelhausen, there's only a couple of us, and they're all related to me. So I'm pretty easy to find. I'm pretty easy to find on the internet.
Excellent. So we'll post that. Kevin, this has been a blast. Thank you so much for doing this, and I look forward to doing it again.
Yeah, thanks, Mike.